morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Wednesday, February 19th. Well, mixed, rather quiet trade here overnight is starting to turn mostly lower. Corn right now is steady to about a half-cent lower. Bean prices are steady to 2 lower. Wheat has turned 4 to 5 lower in Chicago. Mixed in Kansas City and Minneapolis is still a penny or two better. Bean oil still steady to 10 points higher, while meal has fallen about $1 per ton. Speculative traders, they were modest buyers across the ag space yesterday, with the exception of soybean meal, where there were net sellers of just over 1,000 contracts. We did see another surge in open interest in corn. That was up another 28,000 contracts yesterday, as the spot futures closed above the $5 level for the first time since October of 2023, that on the weekly charts. Wheat open interest, that fell almost 7,000 contracts in Chicago and nearly 13,000 in Kansas City, as the short speculative positions scrambled to get out. Not surprisingly, the U.S. government has taken a major step in helping end the war in Ukraine, this time hosting direct negotiations or direct talks with Russia, opposed to the previous administration's support of weapons and other aid to Ukraine. President Trump has called for Ukraine to host presidential elections, while even suggesting that they were the ones to blame for the outbreak of the war. Here in the U.S., a major winter storm that dumped several inches of snow across the southern plains yesterday is exiting the East Coast over the next 24 hours, while sub-zero temperatures did dip as far south as the Texas Panhandle this morning. Much of the winter wheat crop was protected from major damage from the fresh blanket of snow. Temperatures are now expected to gradually warm to normal to above normal readings by this weekend, and to well above normal readings by early next week. Following recent rains, dry conditions do return for much of northern Argentina and far southern Brazil over the next week. Dry areas in southern Argentina are favored for some beneficial rains towards the end of week one of the outlook, helping to stabilize crop conditions here, the areas that have recently missed out on rain events. Soybean harvest and second corn plantings should have moved along at a fairly decent clip across central Brazil, as rains are expected to be moderate there over the next week or so. Corn prices have pulled back to steady, slightly lower. We have held support above the $5 level, though we did fail to get above yesterday's high for the first few contracts. Significant resistance for the March contract rests just above the market in that 508, 510 area. Strong demand should continue to keep a pretty good underlying support for corn. Yesterday's export inspections were a marketing year high. Spot beans look to be consolidating in about a 1025 to 1050 range. Support rests below the market, where the 50 and 100-day moving averages converge just above 1020, that for the March contract. Yesterday's NOPA crush, while the second highest ever reported at just over 200 million bushels, was below the average trade guess. March bean oil did jump out to a fresh 3.5-month high overnight, however, failed for now to hold trade above 48 cents. NOPA oil stocks at 1.274 billion pounds were slightly below expectations. March meal is challenging last week's support at 291.60. March wheat in Chicago did fail to trade above yesterday's high, setting up this pullback, and we have now just dipped back below the $6 level. March KC also rejected trade above yesterday's high by a tick or two, as that has pulled back as well. Thanks for listening, everyone. Hope you have a great day.